Hi guys, this is Michael from Nomadic Insights. In today's video, we're going to be diving into the Tesla Q3 quarterly analyst call. If you enjoy skeptical financial insights, be sure to join us for our Sunday live stream called Skeptic Sunday, where we dive into financial insights and look at common financial positions skeptically. So let's get started first with some of the claims that Elon made, and I've got a lot of things I'm not a huge fan of in this call. Then we'll dive into some of the analyst questions as well. So let's get started. One of the big things that stuck out to me during the hour and a half investor call, or really the hour call with investors, was Elon proposing a potential $5 to $10 billion stock buyback, which seems really well timed for the massive sale of stock he's going to need to do in order to cover his acquisition of Twitter. For Tesla itself, I don't see why the company would want to part with $5 to $10 million in cash in order to execute a stock buyback program. If the company is continuing to invest in new technologies, it would seem more logical to invest that money into research and development. But that's just me. Elon then went on to go into how he sees the overall value of Tesla being equal or greater than the combined value of Apple or Saudi Aramco. That just seems really suspicious, and it's one of the reasons I do take Elon Musk with a massive grain of salt. This timing of a $5 to $10 billion stock buyback is incredibly good for Elon Musk. I don't really understand how this buyback is going to really benefit rank and file Tesla shareholders, but hey, that's just me. The company's continued claims of full self-driving, which get dealt with more in depth by the analysts, is really overly optimistic. I don't really understand how Tesla hasn't been hit with an FTC violation for what is effectively a on its face patently false marketing claim. This idea that somehow paying $15,000 gets you full self-driving makes absolutely no sense to me. Tesla is not delivering level 4, level 5 driving, which would be a full self-driving software. It usually tops out at about level 3 or level 2, which is available from other auto manufacturers. Please don't jump down on me too much if I misspoke there a little bit. But this idea that somehow $15,000 upgrade is full self-driving seems fanciful at best. So again, not to knock Tesla's performance, the company is still continuing to grow at a really fast clip with nearly 50% year-over-year growth. Operating margins have continued to improve. So the company is doing well from a financial performance perspective. Whether it deserves this massive overvaluation on the stock is quite another thing entirely, but a $5 to $10 billion stock buyback on a growth company that should be investing the money in additional growth, such as expanding production and delivery capacity, just strikes me as really beneficial for Elon and not beneficial for shareholders. It seems like that's going to be executed in order to prop up the value of the stock. Again, I'm speculating here, but the I don't trust other people in me and the skeptic in me is just really doubtful that that's going to be good for Tesla shareholders to just somehow have the stock buybacks. Personally, I prefer dividends and cold hard cash, but that's just me with the idea that we're going to buy back and inflate the market value of a stock by $5 to $10 billion through a stock buyback. Just seems like, in the case of a growth company, a really foolish use of capital, especially given the substantial amount of outstanding leverage that Tesla has through outside debt. So that just seems like it's something that's really going to benefit Elon, especially given this debacle of the transaction for Twitter. Now, let's dive into the actual analyst feedback, which I found really curious. So personally, I found the analyst questions on the Q3 investor call to be real softballs. There doesn't really seem to be any hard coverage coming out of these analysts, whether from Morgan Stanley or Oppenheimer funds. I'm really curious why, as we're focused on improving operating leverage, the company is going to be executing on a $5 to $10 billion stock buyback. Whoop-de-doo, that's great, I suppose. But instead, we're looking at, questions related to full self-driving and then lithium and cobalt mining where, Elon is speculating in response to Morgan Stanley whether or not, they're going to be getting into the business of mining lithium and cobalt. If you're familiar with some of the lithium mining operations, there have been numerous articles decrying the environmental impact of lithium mining, how it causes air pollution. There are a number of problems with the production of lithium cobalt batteries. Cobalt mining in the Democratic Republic of the Congo is absolutely terrible. So there's a number of ethical considerations that Elon just kind of brushes aside when he was challenged by, with coal mining versus lithium mining, and how we should just kind of green light this with no regulatory approval. Again, I really dislike this oversimplification and really the lack of challenge by the analysts to Elon's assertions. Going further into this, the questions related to full self-driving, it's like, oh, 100% we're going to be delivering full self-driving. Well, that seems really skeptical because you're not at level 4 or 5 or even full level 3 on self-driving. So again, where are we going here? I'm not seeing this great deal of value that's allegedly being delivered. So again, where is the roadmap to full self-driving by the end of F year 2022 or F year 2023? I hear a lot of marketing spins like, oh, we have the great AI day, our R&D dollars go farther here, Who cares? Show me the beef, baby. Show me the friggin' beef. And I'm really just not seeing that. So again, operating leverage improvements, those are fantastic. We got now this Optimus. But this just kind of continues and continues here. So Cathie Wood, ARK Invest, where it's basically like we need to get out of the innovator's way. Again, I'm really skeptical of that. This idea that somehow if we just let business do business, everything's going to be fantastic and great. Well, that should be taken with a grain of salt, shouldn't it? So the other analyst question that I just thought was just horrendous was related to the superstructure of Tesla, like Google, where Tesla should become an Alphabet-like holding company. First off, all of the companies that Google owned were subsidiaries of Google, and the company is still basically Google. Those subsidiaries have really not been successful. So the idea that somehow Elon Musk, as a large shareholder of Tesla, should be able to organize all of his companies into one umbrella, it just strikes me as really fanciful, and I don't really know why this is a question that an analyst is asking. I would be much more concerned about the diligences and the dalliances of Elon Musk and getting involved in Twitter and how that's going to probably distract from the management of Tesla. My larger concern is how does he have the ability to manage all of these companies and actually deliver a consistent level of return? Again, that just seems like a more legitimate question than, oh, the superstructure of Tesla. Who cares? That's such a shallow and pedantic question. Now, the other thing that Musk loves to do is to claim that he is an engineer. He's not an investor. I'm an engineer. Now, this is going to probably strike some of you as shallow and pedantic, but realistically, Elon Musk has degrees in physics and economics, not in engineering. Elon Musk is not a professional engineer. He might be a brilliant product manager and product marketer, I'll give him that, but this assertion on a call to analysts who are supposed to be critically covering the stock and being skeptical, again, just seems really dumb. I'm sorry, but, that is not true. He's not an engineer. He may have done things like software engineering, but Elon Musk is not an engineer. He's someone with an undergraduate degree in physics who's done very well for himself by starting businesses. But the idea, like entrepreneur, I'll give Elon Musk entrepreneur. But the idea that somehow Elon Musk is an engineer, again, just seems utterly fanciful. Now, again, the company is doing a brilliant job when it comes to things like event marketing. We have Battery Day, AI Day. We have all these branded days related to the company's products, which really look nice from a marketing perspective. But again, I don't see really what a lot of Musk's public maneuverings have done in order to create actual shareholder value. there are a lot of interesting things, but when you're looking at the massive overvaluation of Tesla compared to Toyota, there are some questions there that really need to be raised. And there's a lot of focus here to value Tesla as an AI play, as a technology company, and the company's materials are really geared towards that in this analyst call, where the analysts are really treating it as like this technology play. And I fundamentally see Tesla as a car company. Maybe it's a battery company, but the valuation doesn't really begin to make a lot of sense. Again, if you have any reaction to this, if you have any comments on it, please let me know below. This review is purely for educational purposes only. I've begun covering Tesla more just for my own personal interest, but I just don't see why we're throwing so many softballs at Elon. I mean, it should be able to stand up to scrutiny. I think the self-driving claim needs to go from the company's publicly facing materials, as well as this idea of a buyback. What? So why isn't that $5 to $10 billion being invested in expanded production or something like that? Maybe I'm crazy here.